All right. So we obviously had a sell signal occur in the Dow today. And this is what we're going to be kind of concentrating on, is the reversal signals. Again, this is the bread and butter of candlestick analysis. Where do sell signals occur? They occur when stochastics are up in the overbought condition. So today we had a shooting star harami in the overbought condition. Now that in its own might say, well, maybe they could open positive and take it positive tomorrow. But the fact that we also saw a hard sell signal over here in the NASDAQ with kind of a bearish kicker signal, that if they were selling off the NASDAQ hard and did a bearish shooting star signal in the Dow, and the transportation index also had kind of your shooting star doji, that's a good indication that the bears are probably taking control. The reason we say the bears are probably taking control is because they're doing signals, as we know, are the 12, each one of the 12 major signals up here in the overbought area. But the Dow was up, so conflicts with a SPY. It's not so much a conflict, but by the end of the day, the Dow did the Dow finish down 150 points? I guess it did. So we're looking at something that tells us there's been a change of investor sentiment when you add all that together. On top of that, I don't know what they did with crude oil today, but they knocked it down like over $5, where it had been trading up here in the $65 range, and they closed it at 59.5 in that range, trading a little bit lower after hours. So that knocked down that whole sector. So we're going to kind of take what we should be looking at based upon what the market was telling us. And the market was telling us there's probably going to be some profit taking and or selling coming into this market. Now, what does that do to some of the signals or patterns that haven't actually closed below the T-line? Well, you can see on Pitney Bowes, it didn't close below the T-line, but what's the nature of the move on this one? Big shooting star, hammer signal, a doji, stochastics flat. Which way do you think this one is going at this point? Pretty much, pretty much telling us there's really no decisive direction. So if there's no decisive direction, and we're seeing this type of action in the indexes, what's the at least the mental setup if you own Pitney Bowes? What should you be prepared to do? Well, if the market opens lower and this opens lower, it's telling you don't have any good probabilities of it going up right now. Close it out so you have that cash available. All right, so here is an illustration to say if you've got a pattern, like we can see in our EXPR, the fry pan bottom, what's the one element, or what's the, I guess 3 elements of knowing what a pattern is showing. First of all, it's telling you probably direction, the high probability direction. 2, it's telling us that the magnitude of the return is usually going to be much greater than just an uptrending stock and an uptrending market. And 3, this is kind of the bonus, is that if you have a pattern and the market reverses, it usually allows you to be ready to come out a little bit. It gives you a little bit more time to come out of the trade without it cratering on you before you can get out of the position. So we didn't have very many charts that were still up today. AMC was trading strong, but it closed lower, meaning below the low today. I'm sorry, below the open. So that tells us a story that if they open this lower tomorrow, it's probably time to get out. Yes, that's not the point of being worried or not at this point, SP. Yeah, we're not in the situation that we're worried. We're more in the situation of, all right, what's our analysis here? We're in an uptrend. It closed near the low end of the range, kind of a shooting star. We're still in the pattern, but what did this tell us today? The market was getting weak, and this was trading back toward the lower end of the trading range. If this opens weaker tomorrow and the market opens weaker tomorrow, we could probably get out right away without it still maintaining a good profit in that trade. So it's not the worry that we're concerned about. It's what should we do based upon we've got a pattern. It looks like the market's running out of steam. It looked like it did a shooting star. We're now prepared to take the next step based upon how it opens tomorrow. So I'm going to run through these real quick. So there was our Doji sandwich, our McMuffin. We're still in an uptrend, but the market's getting a little bit soggy. We'll just be prepared that if they start showing weakness on this, we can come out with a good profit. And eyes, this was one that had a nice strong move, and there's going to be a few of these illustrations. Nice strong move today. Looked like it was running pretty good, all the way up over 17.50, up $2, but closed back here. So what did that tell us? One, we ran out of steam. May not have been because of the stock price alone. It may have been because the market was starting to show weakness and people were bailing out. So what's our game plan tomorrow if we were long? If they open this lower after this big shooting star doji and the market's trading it lower, close out the position. The probabilities have gone against you. EXPR, open slightly below close, then moves up a bit. Stay long, or do we exit or stay? On EXPR, we're getting ready to close out this position or it shows weakness. So if it opened positive and started trading positive, obviously you hold. But I'd probably put a sell stop right here, which tomorrow might also be equivalent to the T-line. What we're trying to protect from is, if this is still in a fry pan bottom and opens positive, great. But if it does a bearish signal after a shooting star in the overbought area, even though it hasn't closed below the T-line, it might be telling us there's not any strength here. Let's close it out for right now. You can always buy it back if the markets turn around. What if you hold warrants? Well, the warrants didn't seem to sell off, and I can't get the warrants over here for some reason. But the warrants stayed up a little bit, and I would still hang on to the warrants since they probably won't move around as much. With options that are out 30 days or longer, do you still close or you hold? John, if you bought those options based upon what the stock price was doing, then it's not the length of the time frame of your options. It's what is the price of the stock doing. If a price of a stock is selling off, why would you want to hold on to the calls no matter whether they're 2 weeks out, 4 weeks out, or 10 weeks out? It's time to sell. You can always buy back when the price turns around on the underlying stock and comes back up. So I, uh, through the years, I've seen so many people say, well, I'm going to hold on to this even though I know it's heading down because it will come back. Well, three things could happen. One, it could head down for 2 months. Two, it may never come back. And three, if it comes back up or if it's heading in the wrong direction, you can, and it turns around, you can always buy it back. I think that was three things. Yes, and you're going to lose, you're going to start losing premiums on your, on those options. Okay, let me go through these real quick. So if I have something that looks like this, looked like it was holding up, but now we've got a bearish engulfing signal. It didn't close below the T line, but what's the market doing? Market looks like it's selling off. What's this trend telling us? It's not going anywhere. So why hang on to a position that doesn't have any bullish sentiment to it, doesn't look like it's going anywhere, and the market's heading down? I would either close this out and say, let's go find a better situation depending on what the market's doing. Jody, hang on to your individual ones until I tell Jim to do the double line. So here's what you have to factor in your trading. Today we recommended TAOP, and it was trading up nicely all day long. So if you had bought this during the day, where would be a good place to put a stop? Obviously back at the open. No, Henry, I don't do anything pre-market because pre-market doesn't really give you the true value until everybody's buying and selling. A lot of people don't buy and sell pre-market. You want to see what everybody's doing on the open. So here's a logical place that if you were buying something because it was doing a nice pattern breakout and then it came back down through the open, what happens as soon as it starts ticking below the open? You can see the dark candle. You can see the sellers are in control. In worst case scenario, you put your stop at the previous day's close. If it comes down through there, still selling. So I'm pointing this out because if you keep in mind that probably about 30% of your trades aren't going to work the first time you put them on. So the whole point of investing is if something's not working, get out of it quickly. Now, this one may not have been working, not because of anything that has to do with the price movement. It's because the market was selling off, and you could see they were selling this off. So you want to come out of that position. Same thing on OCGN. It was trading positive today, but as soon as it came back down through the T line, what did it tell you about the trend? It wasn't there anymore. That would have been a good place to close it out. So I think this has probably got the biggest potential in the future, QuantumScape. But notice what's happened over the last couple of days. A bearish engulfing signal. It held up at the T line. But now look what happened. They sold it off again. So if you were looking at this right now, would you say this is a good-looking chart? And if the market's getting weaker and they're selling this one off, you just have to say, well, I need to close it now. I can always buy it back later. If already have swing trades on, why buy more when market in overbought and prone to reversal. Why buy more? Michael, did we say to buy more of what? I don't understand the question. Oh, we're talking about new trades. No, not looking at any new trades right now. We're looking at existing trades that we're on, of whether we should be getting ready to close those out. Henry, if you're, yeah, I'm talking about if you were in some of these positions, even though they didn't do confirmed sell signals, we know the market's selling off and we're starting to see weakness. That means we want to get ready. On the T, well, today, going into the open, the Dow was trading higher. So why were we buying? Because this was a wedge breakout. And this morning we had no indication that the sellers are taking control. However, when the market started selling off, and this started selling off, just using the candlestick candle or graphics, what does it tell you that the sellers are taking over? Right as soon as they came back down through this level, you close out the position. Jake, we don't know that. Now remember why Sava closed up big yesterday. Because somebody recommended it. There wasn't anything in here that told us that there was a change of investor sentiment. All it told us was somebody recommended it. So it was changing the temporary or the current supply and demand. When it started selling off, we have to use a candlestick logic. If this was the candle that told us the bulls were in control, where should it not close if the bulls are in control? It shouldn't close back below the halfway point of this candle. If it does, the bulls aren't in control. You close out the position. Doesn't mean you can't come in and buy it on the next buy signal, but we don't know whether that's tomorrow or 2 weeks from now. Bill, yes, the main point of closing out a trade that's not working is because it's not working. The whole premise of candlestick analysis is that every time we see a position or a setup of a pattern that we know is a candlestick pattern, we know what to expect, what price move. We also know what to do when it's not working and close it out quickly. Remember, you've probably heard every money manager tell you cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. That's what the candlestick charts tell you, is when there's a change of investor sentiment, even though you might have just bought something. On this one, this could be a bearish Harami doji. And what's our doji rule? It's going to move in the direction of how they open after a doji. Now, it looked like after hours it was trading up. So the point of that signal or any of the signals is knowing what to expect after a candlestick signal, and where does it occur. Do volume change in day like, do volume change? Doesn't really matter. We're not buying volume. We're, now on a day like this, if you had huge volume and it did this up here in the overbought area, that'd be a little bit more of an indication that there was a major change of ownership. We'll get to the oils here in a bit, Ron. So what I'm trying to point out on all this is we know what to expect for a bullish trade. We recommended CRUS, Cirrus Logic the other day because of the best friend. It opened lower. Man, that was not good. But they took it right back up. Thank goodness gracious Agnes. So everything was working. However, notice what it did today. It closed right back down at the open of this candle and below the halfway point of that candle that told us the bulls were in control. Does that look like a good looking chart? And this is the hard part. This is the hard part that I had to go through for a while to understand when something's not working. Even though mentally you said, oh, this is a good chart, I want to be buying it. And then you see this. The hard part I went through was, man, I analyzed this to be going in this direction. It's doing this. That can't be right. Or what did I do wrong? And you didn't do anything wrong. Just said market conditions or whatever reasons they're selling this, close it out. It's much better to have a small loss in a position than hold on to something hoping that it's going to come back, because that does two things to you. One, it may even be a bigger loss. And two, even if it trades down here flat for a few days or many days, that money's tied up in a bad trade versus being able to take it and move someplace else. Did you close intraday or at the close? I closed at the close. Would you say support failed at 77.99? No, I wouldn't say support. I wasn't buying it because of support. I was buying because it should have been going in this direction, not closing at the bottom of the previous day's candle. VG, yes, that's another thing that we show people how to do. If you've got something that's moving up strong away from the T-line, then you can flip to your 10-minute chart. Sometimes you have one red bar in an uptrend and the next day resume trend. How do you stay in that trend? You analyze where you are on the stochastics and whether that down day was a reversal signal or was it just a down day. All right, let me go through. So we have the T-line rule. This was pulling back. It had gapped up. This is CCIV. But the fact that it closed below the T-line today told you your probabilities went drastically against you. That's when it should be closed out. Anytime you see something closing below the T-line, you just want to automatically say to yourself, this is not where it should be trading. Let's move on to something else. Worst case scenario, it does a J-hook pattern, you can always buy back. Is that a blue ice failure? Not necessarily. I don't see, and I can't remember whether I've got, oh yeah, I do have the 200 on here. Okay, so using that same information of when are the sellers taking control, these are the type of things that you look for. We know a doji gap down is your bearish best friend. Now, it popped up yesterday. It made things look a little bit tentative. But here's a very simple observation. If you see a strong sell signal and they can't close it up above the T-line, assume you're in the downtrend. Then the next thing is, if you see something like this and they are gapping it down again and heading down, that means the sellers are still definitely in control. Yeah, I saw. So there's your, that's even a better chart. What does a doji tell us? Indecision. What other aspects can we look at as far as this doji? Well, they failed right at the 50-day moving average and pulled back. Then right behind it, you have a bearish left-right combo. We know, number one, the bearish left-right combo or any left-right combo is a very strong, compelling signal. It doesn't usually need confirmation. The fact that it closed after a doji, failing at the 50, doing a bearish left-right combo, told us if this opens weaker the next day, you could be shorting it immediately. Because that signal right there was a strong sell signal, number one. The failure at the 50, number two. A close below the T-line, number three. Then they open it lower. That's just telling you the options in the wrong direction have murdered me 1,000 times. So VG, if you're trading options, that means you want to be a little bit more sensitive to sell signals. If I was long, I was long, and I was long, and then I saw a bearish harami, I'm getting ready to close out some of that position just because I can see the probability of start going against me. Even though your stochastics are in the middle, what's that signal tell you? Strong selling. What's the failure at the 50 tell you? You better watch to see what's happening. So remember, we're not trading stochastics. The number one criteria is the signal itself. I looked at the sector of SMAR and it confirmed with a bearish doji sandwich. All right. All right. So I have discovered that if you're looking at a market, especially in the case of the NASDAQ here for the last few weeks, that's been showing weakness, that anytime you see a close back below the T-line, you have to assume that the probabilities are still heading in that direction. If you're long and you start seeing closes below the T-line, close it out until you see a strong signal telling you you're going back up above the T-line. When did you trigger the short this morning? I think I started buying more puts on run later in the day because it was holding up pretty well. But then when the market started selling off, I added some more puts because it was confirming that it wasn't going to go up above the T-line. Anytime you see a close below the T-line, so observe the obvious. Remember what we said about a breakout. Look at our kicker type breakout. You're in a 45 degree until you see a sell signal and a close below the T-line. Well, there's your sell signal. There's telling you it better open positive and trade positive to stay in it. There's your gap down close below the T-line. That would have had you out of this trade. So not only do you use the sell signals to tell you when to start obviously taking profits on your long positions, but it just gives you better insights to say, I've got some opportunities now to go short. This is why I always say observe the obvious. Notice what happened here at the 50. Then they gapped fuel cell down below the T-line. Not a good place to be anymore. And so even this sector that was acting very strong is now getting selling. And so Blink, which was acting well until today, this would have told me I would stay long, but it needed to trade positive. Opened lower, a little bit nervous, but came back up. The fact that they opened it right back at the T-line and headed down, what was that indicating? The bulls aren't there. If you were long, you closed out the position down here. All right. And you can see it. A lot of people ask about Apple. Well, this is why I put the 34 on my chart. It's what I call a secondary moving average. The main one's the 200 and the 50 simple. The 34 EMA seems to work well, but so I can use that to say, well, there's a doji and an open lower. All right, what do we need to see to stay in this one today? We need to open positive and trade positive. What's our doji rule? If it opens lower, it's going to trade lower. If it gaps down, especially right at the T-line and trades lower, what's it tell you about if you were long? You want to get out pretty quick. And this is just a roadmap to tell you what's happening. Would you wait till the end of the day to close position on blink? This was just a roadmap to say, again, just using your Doji rule. Probably, well, that's hard to say. If I had been long and it was hovering right in here and then started trading off near the end of the day, I would have closed it near the end of the day. No, the triple witching doesn't do very much to the market anymore because the volume is too big on most stocks that they aren't moving them around. Did you stop using the 3MA or was that just an exit strategy? No, I still use the 3MA. Just sometimes when I use my Dragon Naturally Speaking and I have it on and it shouldn't be, it eliminates stuff. I should have the 3EMA on here. But no, I still use it. Tomorrow is a quadruple witching day. Okay. All right, so what sector started showing sell signals? This is just very simple common sense. There's kind of our bearish left-right combo. And why was this more relevant? Because look what happened here. They gapped up and did a doji in the overbought area. That's a little bit of a warning. Well, there was your bearish left-right combo. Didn't confirm. Came back up. There's your bearish best friend. So you've got a strong sell signal. You got a strong sell signal that closed below the T-line. What should be your assumption? The bears have taken control. Those are strong sell signals. The bears or the bulls couldn't get the price back up above the T-line. That's happened all the oils. So logic says if you see all the oils selling off, that's a pretty good indication that they're selling off all the oils, putting your stars in alignment. When Tesla came back up, there was a kicker signal that told us they reversed this. But now what's it telling us? Back below the T-line, the bears are still in control. Where could be your next likely target? Down here. That means anything that's related to the electric vehicle stocks are probably things that you could be shorting. Nikola, best friend. Now look at kind of your trend kicker signal to the downside. Where do you think this one's going? Well, this is wave one, bearish J-hook. Still got a lot more downside. The bearish best friend you are talking about is bearish kicker. Is bearish kicker? No. Difference between a bearish kicker and a bearish best friend. You're seeing it right here on this chart. This is kind of your bearish kicker, almost. Opens here, closes here. The next day they gap it down at pretty much the open of the previous day and go the opposite direction. That's a bearish kicker signal. A bearish best friend is a doji followed by a gap down. So now you've got a bearish best friend followed by a bearish kicker signal, both of them very strong. Well, I don't know, doesn't matter where. There's your bearish best friend. Okay. So I don't know what the question is, Henry. The bearish best friend, are you talking about his bearish kicker? No, A bearish best friend is a doji gap down. A bearish kicker is when they open it at the previous day's open that went this way and go that way. All right, did I get that straightened out? No, the T line just helps confirm. We'll do a session on one night for the members on the T line. What's it? Yeah, we'll do that with something else because it'll take about 3 minutes to explain how to use the T line. It basically is used more accentuatedly the further away you move from the T line, and if you see, oh, I guess I better do it right now. Let's add moving average setup. Three exponential. Make this a very light green and make the weight of that one 0.9. Okay, I think we'll add. All right, so there's your 3T line. So the 3T line can be used in two manners. One, the further away you are from the T line, the 3T line becomes more effective. And two, when it comes up through the T line, after you see a buy signal, it just adds a little bit more confirmation. So we'll do that some night. I believe MP had good earnings now. With the market being geared toward a downtrend, would you be fighting against the market trying to get into something like that? Where is MP trading? Take a quick look. Well, it's trading slightly, I don't know, can you see this? It's trading back up toward the open of today. So it's trading back up here. So I probably wouldn't go after it aggressively if the market's still selling off. But I would keep it in the back of the mind that if you started seeing some good buying. Is it a good time to short run? I wouldn't be afraid to. With this being your first target, at least putting you in the right direction, and this being your second target. Okay, we did Tesla. So right now, the biggies aren't any good to trade. Now Netflix, if this opened lower after, again, a failure at the 50, a doji, a gap down, if it starts trading weaker, you got wave 1, wave 2, wave 3. Amazon, you can see, is not a good trader. Which way is this one going? Doesn't have any idea which way it wants to go. If stock comes back below open of a candle, let's say around 10:30 or 11, would you exit immediately or wait until later part of the day near the close? Near the close. Remember, there's only two important facets to a candlestick signal. Where does it open and where does it close? Everything in between is just noise until they get to that final decision. If you were long, well, that's not a good one to illustrate. If you're long or if you're short something, you want to see what it does by the end of the day. So just because it comes down during the day doesn't, and I'll see if I can find something to illustrate that point on one of these charts. Okay, so I want to take a quick look at, well, on something like this. You've got a good chart. There's kind of your morning star signal at the end of a flat trading, acts like a scoop pattern. And I'm only showing this to show you what a good pattern looks like. However, what is the first criteria when you get up every day as far as what you should be doing? Well, obviously, if the market's opening down 200 points on the Dow, yes, you're not going to want to rush into a bullish trade. You want to sit back and wait to see what happens. With the caveat that if the price moves drastically away from the T-line intraday, trading off the 10-minute chart, yes. If you're in something, yeah, if this was something, let's just say hypothetically, this was a 10-minute chart, and the stock you were trading was well above the T-line, and you started seeing something like this, you would be taking profits right here because you were that far away from the T-line. Okay, I'm just trying to read the questions as fast as. With such a bad day today for the market, let's say there is a bounce up in the morning, followed by a sell-off or weakness by early afternoon, would you hold or just take quick trades? It depends on how fast the trader you want to be. If you're a swing trader, you wait till the end of the day. If you've got a good intraday trade and you're intraday trading, you take your profits based upon the 10-minute chart. Mike, that's the whole point of looking at candlestick signals. We're not waiting 2 or 3 days to see if a downtrend is starting. We've got the candlestick signal that tells us that if they open this lower tomorrow, we're probably in a downtrend. How long is that downtrend going to last? It might last where they bounce it down to the T-line and bring it back up. Or they might bring it down for 3 weeks. We don't know. All we know right now is that's a sell signal in the overbought condition. And the Japanese rice traders say if you see a shooting star signal in the overbought area and it opens lower, it's going to be selling off. So on something like this, yes. If this opened positive today, see if I can. They must have stopped trading this during the day. Was this the open? Can't tell where it opened. So to open, yeah, you would be trading this. If they open this and they trade it up here immediately, look how far away you are from the T-line. That's when you flip to your 10-minute chart. Okay, let me do a few more of these. This one looked good during the day. Opened positive, was trading positive after a nice bullish engulfing signal, but closed back down here. So if I would have bought this up here knowing that might be a gap up and it closed down here, I just got to say to myself, that was one of the 30% that didn't work. Let's close it out. Why would we not wait to see if it opened positive and trade positive the next day? Because we don't know if it's going to trade flat or down or up. So why not take the money out? And if it does trade up a little bit, but you wouldn't get back in it, you've got your money to go find a better trade. Jim, you can use whatever time frame you want to study or want to trade. So if you're a swing trader and you're holding on to positions for 2, 3, 4, 5 trading days, maybe you use a combination of a daily chart and an hourly chart. It doesn't take very long to sit down and say, all right, here was a price move. What would have been the most effective trade time frames for what I like to trade? Maybe it was a combination of a 15-minute and hourly chart. Some people trade longer terms, so you use maybe a daily chart and a weekly chart. Some people trade very quickly, so maybe it's a combination of a 1-minute, 5-minute, 10-minute chart. Are you trading futures in this market? If so, what time frame? I haven't been doing it now because I've been too busy, but sometimes I trade soybeans, and I'll trade those off a 10-minute chart. So you can see what happened on the soybean 10-minute chart today. Ran into problems up here at the 200, closed back below the T line. If you shorted it, how long did you stay short? Until you saw a buy signal and a close back up above the T line. Now, if I want to see if this is actually working, and I flip to my 5-minute chart. And my 5-minute chart says, yeah, it's trading below, and they're not bringing it back. That means the 10-minute chart will work. Yes, I used to trade the E-minis off the 1-minute, 3-minute, 10-minute combination. So depending on how active you want to trade, maybe you want to trade off the 1, 3, 10, maybe the 5, 10, 30 minutes, depending on how many trades you want to make during the day. No, the moving averages, the 200 and the 50 are simple. That's because every major money manager around the world uses those moving averages to make their decisions. We're not using them to make our decisions. We're using them to see what everybody else's decisions are at those levels. What was I going to illustrate? Now, I guess back here on run. So you can see how they use the 50 as support. We could see that they were buying at the 50. You could see how they broke down through this level with a candlestick sell signal. So let me just ad lib in here and say the number one criteria for your high probability trades, bearish engulfing signal, bearish engulfing signal, bearish best friend. See if I can do this elegantly, which sometimes it doesn't work out. Let me see what I got here. There it is. Not this weekend, but next weekend, March 27th and 28th. We're doing the basic 2-day training. I say basic. We start from A and go through Z. We go through the 12 major signals, what indicators work best. Then we go through the patterns. Then we go through the top rank signals and patterns, which is the combination of the signals and patterns. We do our entry and exit strategies. We look at how you use gaps with candlesticks to enhance your returns, how to scan for the best trades, how to cultivate. If you find 20 good trades, how do you pick the best 1 or 2? So we go through all that. The whole point of a 2-day, yes, it is recorded. So if you can't sit through the whole thing, it's going to be recorded. And so essentially what it does for you mentally is where you might be seeing bits and pieces and picking up stuff as we do these type of sessions, this takes you chronologically through the logic of candlestick analysis just in an orderly fashion, so that when you're at the end of this 2-day training, now you've got everything in your mind of how things should work. So when you do come to one of these sessions, it's not so that you're learning something new and saying, oh, I need to figure that out or remember it. You're now reinforcing what you're seeing. And so anyways, it's the bread and butter course that if you haven't taken it, you want to take it. If you've taken it before, you get to come back and like all our courses, if you've taken one or have paid for one, you can come back and see it for free whenever you want to. Okay, so we saw things like this. Schnitzer steel looked good. It looked like a good J-hook pattern. So if you were ready to buy or if you did buy, when it came back down here, what type of pattern? We start at 9:30 on Saturday morning. You're allowed to get a 15-minute lunch break, and then we go until 3, 4 o'clock in the afternoon. Sometimes we go to 5. We've been known to go to 6, depending on how many questions are out there. And then we do the same thing on Sunday. So this is another situation where if you had bought on a day like this and it closed here, now at least you know what your trading strategy is. It has to open positive to stay in it. If it opens lower, obviously you get out of it. Same thing on U.S. Steel. Now, it looked like U.S. Steel was trading up a little bit higher, but if it opened lower tomorrow, what that tell us about our J-hook pattern? It wasn't there, you close it out. Lots of burning candles, that's right. Yeah, this is another indicator. Your financials were trading up good, like Goldman was trading positive today. But when it came back down through the open, what was it telling you as far as who's in control? Obviously, the bears were in control. So same scenario on JP Morgan. Came right back down into the trading range. I told you, and the reason we look at the big financials is if the big financials are acting well, the whole market's going to act well. The blue line is the 50-day moving average. I'll go through these real quick here. The blue line is the 50-day, simple moving average. The red line is the 200. The T line is your 8 exponential moving average. Now, I could take everything off this chart except the T line, and I could trade very successfully. The reason we've got the 50 and the 200 on here is because we want to see what everybody else's decisions are at those levels. Because that's where all the major money managers are making their decisions about their portfolios. The little green line we just added on tonight is the 3T line. That works in conjunction with the T line. And then the gray line is the 34 EMA, which works reasonably well. Yes, so if you were, this chart is the daily chart. As soon as you flip to your 5-minute chart, it's all the same thing. Everybody's using those same indicators no matter what time frame. Okay, so here was what I was illustrating because of patterns. You can see the pattern setting up, a fry pan bottom. Now, why is that relevant? Look what this stock did on a fry pan bottom. It didn't really back off because the fry pan bottom pattern is already a buildup of investor sentiment. The gray line is the 34 EMA. Are still on strong trending up. Today's candles may just be affected by Henry. That's the Wrong way to look at it. It's not that they're being affected by the market. They are showing you what the results are. So that's kind of putting the cart before the horse, that because the market sold off, these sold off, is the wrong way to look at it. If these were selling off because the market was selling off, that means there wasn't any strength in these anymore. Or the other way around, if these were selling off, maybe the market was selling off. But it's not a function of something was just selling off because the market was selling off. That means if something's selling off because the market's selling off, there's not a lot of strength there. So it doesn't matter why something is selling off, because if it's going down, it's still taking away your profits. When looking for an entry, does the pattern come first and then look for the signal to enter? Yes. If I'm looking to buy something, I was looking to buy it based upon a signal. Then I want to see that that signal is confirming. So if this is my pattern, fry pan bottom, on this day, I saw a breakout. I'm going to buy this on positive trading tomorrow because that would be confirming. Well, the next day it opened lower and traded lower, so I wouldn't enter that trade. Where would I enter this trade? If it came back up through this level, which it did the next day. If I was buying today, I wouldn't want to see it open here. I want to see it open positive, confirming the signal. So the whole point of a signal or pattern is it tells you what should be happening, and the confirmation of that is seeing exactly what should be happening after that signal. So the more signals that we can put into our analysis, or the more features, we can see there's a scoop pattern setting up. Look at our flat handle. There's your scoop. And what started the scoop? Indecision, indecision, a bullish candle confirming closing up above the 50, the T-line, and the 34. What do we expect coming out of a scoop pattern? A strong slingshot effect. Well, this is one of the patterns that we won't be showing because it's just something that you want to recognize. This is what we call three white soldiers. Came up, opened lower, came up, opened lower, came up. The Japanese rice traders say they were taking out sellers and then buying, taking out sellers and then buying. Now look what happened on this scoop pattern, three white soldiers. It was still trading positive today, even with the market selling off like it did. Oh, VG, what are you saying? Looks like Goldman is not the worst chart I saw tonight. No, it's not a bad chart, but it's telling you something. But they were selling this off going into the close, and that means they were selling it off below where they opened it. That meant the bears were taking control. By the time you've had three white soldiers, wouldn't it be too late to enter on that one? Yes, maybe. Except if you were buying, which one was that? Oh, I can't even remember. Jill. If you're buying this based upon the scoop pattern, you can see it's still trading positive. So it might not be the best place to buy. However, look at the confirmation. It was still trading positive today in that market because of the scoop pattern, three white soldiers. They're just adding this all together and saying, oh, that's a lot of good strength. Maybe I could be buying if I was trading something like Jill and say, yeah, I can still buy this. Let's see. Whoops, hold on. Okay. Now I got it. All right. Okay, so on the other side, we're looking for the strong sell signals. Now look what we can see in this chart. Look how they gap this down below the T-line. That started your downtrend. What did that tell you right here? That strong selling below the T-line told you there's been a major change of investor sentiment. What do we have right here when it bounced up near the 50? Well, we had a left-right combo that told us they weren't closing above the T-line and they closed back below the 50. What happened when they did a kicker type signal that didn't close above the T-line? If I had been short, I would have covered my trade here. Because look at the bullish kicker signal, one of your strongest signals. Then the next day they gapped it right back down and did a bearish kicker signal. That told me I would be going back short. And then look what they did today, kind of another bearish kicker signal. And here's the added evidence that the bears are still in control. Because look where they brought it, right back to the T-line and failed. I mean, right back to the T-line. When I say that, you've got to remember that nobody has the T-line on their charts. That's why we know this acts like a natural support and resistance level of human nature. Because if it's coming up to a level that nobody has on their charts and fails there like it does so often, we can now conclude that the T-line acts like that natural support and resistance level. Yeah, Jill looks like 5 white soldiers. Yeah, you might not be buying Jill right now. You would have been looking at Jill on the basis there was a scoop pattern. You might have been buying on this day, and further confirmation was, yeah, you can stay long because now you've got 3 white soldiers and a scoop pattern. Just adding more evidence. USO is a very simple trading rule. You can see how you had Doji, 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 Doji right on the T-line. What's the Doji rule? It's going to move in the direction of how they open after a Doji. So if they opened it lower, what was it telling you about the T-line? They were still trading or selling this off. Now, would you have expected the magnitude of this? Definitely not. But that's the kind of the caveat that I always tell people, that essentially the candlestick signals are going to put you in the direction where the probabilities of being in a good trade is greatly in your favor. When was it time to start taking profits on Rite? Well, you could see when it was time to buy in the oversold area. Doji, Doji, Doji hammer, left-right combo, close above the T-line, breaking this downtrend until when? Look how far away you were from the T-line up here. If it was still in an uptrend like here, they should have opened it positive. The next day they did a bearish harami, Doji. Now remember, anytime you see a Doji in a signal, it usually acts a little bit more compelling than just kind of a bearish harami. The fact that they opened it lower today, what did that tell you about the Doji rule? They were probably moving in this direction. What it was telling you about the harami rule, they were probably moving in this direction. So if you've been long, if you didn't close it up here off your 10-minute chart, you would have closed it on a weaker open today, because if it opened lower, which way was it going to go? It was going to go down. Where do you think the first target was going to be? Probably back to the T-line. So this is just visually able to put 2 plus 2 together to tell you with much improved probabilities which way a price is moving. Look at the failure right up here at the 50. They're still trading below the T line on Fiverr. Can you show how you should hold the eyes with a 10-minute chart? Well, I wouldn't have, today you wouldn't have known to sell eyes. That's the 5-minute. So you could see that most of the day it was trading flat and then it broke out to the upside. Looked good. You wouldn't have known to sell this, or you wouldn't have flipped to the 10-minute chart because your daily chart wasn't, you just now started to move away from the T-line. Now this would have been more appropriate to be going to your 10-minute chart because you were way up here after 3 days of gap ups, whereas this just looked like it was starting back up. Now when it came back down here, if you had been trading this, I can't even say that. If you'd been trading this, you probably wouldn't have paid too much attention to the 10-minute chart because we probably wouldn't have expected it to sell off like this going into the close, based upon it not really being that far away from the T-line when you started. So the answer to that, Connie, I'm sorry to say, is you probably wouldn't have known to sell it off because they just slammed it down pretty quick like everything else right on the close. Does a blue ice failure tell how far something? Yes. If they fall through the ice, they come up and try to find the hole they fell through. If they can't find it, they drown. Where are they going? They're going to the bottom of the pond, the next major support level. Can you explain the SPY? I don't know what you want me to explain. Today, they closed back below the T line with kind of a bearish kicker type signal. The Stochastic's in the overbought area. That just tells me the probabilities are pretty strong that you're going to be heading down. You add that to the fact that the NASDAQ did kind of the same thing, a bearish kicker signal below the T-line. I would suspect at least coming back to this level. When you add all that together, that tells you the bears are in control. Can you explain where stop should have been placed on eyes? Oh, what did I just do? I would still use the T-line as a stop. If you bought it up here, you could have gone to your 10-minute chart and say, oops, I was buying up here, now all of a sudden it's selling off. I could close it out if you were that nimble. I didn't even see this back off. I don't know what I was doing. But right now, it's not you had a sell-off, but look where it closed. It still closed at the 3 T-line. So the logic says if you're above the T-line, you're still in an uptrend. If you're above the 3 T-line, you're more than likely still in a good, strong uptrend. So I would still use my same parameter that this looks like it's still in an uptrend, but I definitely would want to see this open positive and trade positive tomorrow. How did people respond to Powell's 2 p.m. announcement yesterday? He would keep rates low. But yesterday, everything was positive. But were you in the room? Or I said just be careful, because what good news is there after that? That may have been the news everybody was looking for, and now what's the next thing to look forward to? Maybe they're going to raise taxes. That's not good for the market. So that might be the next influence on the market. The Qs could be a blue ice failure, yes. So I would suspect first target, second target. So the logic or the probabilities are that if they came up and they failed up here and did a kicker signal to the downside, remember a kicker signal is your strongest signal. Could the highs been, I don't know, let's see where, at the previous day's close? Yes, but that was also coincide with the T-line. Okay, got some more here. And we're already over past due, or past time. So observe the obvious. Look where they supported off the 200. Look where they failed. Shooting star Doji, failure at the 50. This is on trade desk. Now, it looked like they were going to hold up above the T-line. But when they did this, opened and gapped down, anytime you see an uptrend and they're opening at the previous day's open, that's warning Will Robinson that that's not good. And the fact that they started trading it lower was confirmation that that kicker signal was going to be in place. So you've got a bunch of things. A shooting star failure at the 50, a gap down to the T-line and trading lower, kicker type signal. Now at least we can see that the 200 is probably your next likely target. OKTA, look at your kicker type signal. Had a kicker bullish signal, looked great. When they open at the previous day's open and go the opposite direction, if you're long, close out the position immediately. The probabilities have just gone dramatically against you. Oh, let's see, I lost my page here. We did Nikola plug. Anytime you close below the T-line, there's your bearish best friend. The probabilities are extremely strong. OKTA, yes. Next likely level, not the 200. The first support level would be testing this level. Second would be, if this is wave 1, wave 3 could be that same magnitude. An ear, observe the obvious. They came right up to the 50. They did a bearish engulfing signal. They closed below the T-line. What type of pattern can we recognize on this one? Wave 1, wave 2, going into wave 3, a bearish J-hook pattern. Just a few more because they're all pretty much the same. But what I really want to point out is if you can see a sell signal right at a level that everybody else is watching, and they start selling it off, that means everybody could see that that was a resistance level. We can just see it quicker because of the sell signal. And the fact that they brought it back down through the T-line and the open of that previous day told us you shouldn't be long, or you could be shorting Jemiah. Let's see, did I just do ear? Yeah, the failure. Heading down, I always like to reminds me of the guy that bought his hearing aid, the best hearing aid in the world. It cost him $10,000, and it was great. It was the best hearing aid ever. And his buddy asked, well, what kind is it? He goes, oh, about 10 to 4. All right, so there's your gap up, bearish signal. There's your bearish doji sandwich sitting right smack dab on the 50. This is pen. So what's your logic here? If they open this lower, what's it telling us? The 50 is not going to be acting as support. You've got a bearish doji sandwich. Look for more downside. Oh, there's the oils. I didn't get down to them. So if you can see one oil company is selling off, and you can see a bunch of them selling off, what's the simple assumption? Pretty good reasoning that they're selling off the oil industry. So if you see one signal, that's okay. That's right. If you short the oil, so if you see a sell signal, bearish engulfing signal, and then 3 days later you're seeing an evening star signal, then you're seeing a doji sandwich, and you add all that together, that's the information that we want to have in our heads, knowing what the candlestick signals are telling us. So I keep telling people, this is not rocket science. These signals have been identified to tell us when there's a change of investor sentiment, which is essentially putting us in situations where the probabilities are greatly in our favor that we're going to be in the right direction at the right time. Okay, I guess that's about it, because all the rest of them are kind of illustrating the exact same things. That once you see a sell signal, look at your hanging man signal in the overbought area, that far away from the T-line. If you were long, where was your stop? First of all, if it started trading lower, it may have closed out half a position. Secondly, I would have had a stop on anything or everything if it came back down through the low of that hanging man. Why? Because the Japanese rice traders have told us if you see a hanging man in the overbought condition, if they start trading it lower, the probabilities are pretty strong it's going to be heading lower. And we know by adding a few other indicators, like look how far away you are from the T-line, that if they start selling it off, where do you think your first target's going to be? Probably back to the T-line. I guess that's about all I've got for tonight. Try to think if I've got anything more to illustrate. There's your blue ice failure on Zillow. There's your bearish doji sandwich. After a bearish left-right combo closed below the T-line, where do you think your likely target's going to be? So for option traders, at least you have a direction with a high probability, and you've got a target. So maybe buying puts isn't real profitable, but maybe buying a spread makes it much more interesting. Blue ice failure is where they fall through the ice. They try to come back up and find where they fell through. They come up, they can't find it, they drown, so they go to the bottom of the pond. It's just a bearish J-hook pattern that has much more, what do I want to say, definement to it. It's like a bobble breakout, the bullish J-hook pattern that comes up to a resistance level, fails, and then pulls back to the T-line, and then comes back up to the resistance level again. doing a bobble breakout. Okay. Hold on to your individual ones. All right. Are there any general questions on candlestick analysis? Can you look at oil futures? Looks like yesterday supported the 50. Today, not getting that low. Well, yeah, today, that's today's trading. Hit the 50. This is on the April contract. But you don't have any buying yet, and your stochastics are still heading down. So I wouldn't look for a bounce here yet until they get into the oversold area. Hang on to your individual ones until I tell Jim to do the low line. After the evening star, if it opens lower than the previous day's close, would you close right after the open? After an evening star, if it opens lower than the previous day's close, meaning opens lower after the evening star, yes, that's the whole point of knowing what to expect after an evening star signal. But if it opens lower, it's confirming the evening star signal, you close it right away. Does the lack of reversal signals diminish the strength of the potential bearish J-hook, like on Tesla? The only thing I could tell you there, Marshall, is I probably wouldn't be maybe shorting Tesla, but I wouldn't want to be long. But because Tesla is selling off as like an indicator for that sector, remember what we just said about Goldman and those, if they were trading positive, it kept the market up. Well, if Tesla is selling off, it's like the indicator for the electric vehicles, that if it's selling off, even if it doesn't have a strong sell signal, maybe you go to one of the others in that sector that does have a strong sell signal and short one of those. Does the lack of, oh, okay, we did that one. Did candlesticks leave hope for any sector to be ready for? Did candlesticks leave hope for any sector to be ready for? Well, I can usually identify that by which stocks had strong moves today. And there wasn't anything that you had come across, or I came across, that was telling me, oh, all the trucking stocks were acting stronger. Yeah, there wasn't anything today showing any great strength in any sector. Are candlesticks just as accurate for penny stocks that have billions of shares a day? Yes. Candlestick signals are not a indicator of a sector or of a trading entity. Candlestick signals are the graphic depiction of everybody buying and selling a trading entity during a specific time frame. Stocks, bonds, currencies, commodities, tulip bulbs, penny stocks, or $500 stocks. It's all the same. It's still the same indication of what's going on in human nature. With the market whipsaw the last couple of weeks, is it an indication of market topping? Yes. So if you start seeing indecision, remember what a doji is. It's indecision. And if you see, if you start seeing something where it's up, down, up, down, up, down, that's indecision also. So that would have told us that there wasn't any real strength to the upside. and now it's telling us they failed at the 50. So that's got the NASDAQ has the potential of a blue ice failure, meaning there's your first target, there's your second target. Let's see. Little J hook on healthcare plans, bullish in golfing. Okay, I don't know which ones that is. Whoops, didn't scroll in the right direction. Is there a software that tells and informs one can search for the different candlestick patterns? Yes. All our formulas are over on Metastock. So Metastock is probably your most comprehensive software scanning program. I'm not pushing any one over the other. I use TC2000 and I use Metastock. But TC2 or Metastock has it where if you put your indicators or you want to see what the indicators are, every time you pull up a chart, it will show you the different signals and patterns. Or if you're looking for a specific signal and pattern, you can eliminate just to those signals and patterns. Okay, we're at 9:30. The blue ice failure is simply just kind of it was named by my late friend Dave Elliott of Wall Street Teachers. He would describe it as somebody falling through the ice, in this case a support level. Then they come up to find the hole they fell through. They can't find it, so they drowned. So that's your blue ice failure. Now, I always emphasize the blue ice failure because when he and I would go around the nation doing presentations for large investment groups, I would have a little story that would help people remember the blue ice failure, which is, how do you catch a polar bear? Well, you cut a big hole in the ice, and then you take a can of peas and you spread it around the hole. And when the polar bear comes down to take a pee, you kick him in the ice hole. I always told people it wasn't a very technical explanation, but they remembered blue ice failure. So this, with the bearish kicker signal, is kind of a blue ice failure, which tells us that they may be heading for the next target. The 45-degree pattern is a current candle open always above. No, a 45-degree pattern is, let's see, 45-degree pattern is when you see a big bullish candle and then it goes into a 45-degree. So all it does is stays above the T-line. So you can stay long as it doesn't close below the T-line. That's the 45-degree. And it's got a very simple strategy. You stay long until you see it close below the T-line. That is bearish, but it hasn't confirmed. You're still above the 3 T-line. You're still above the T-line. You're still in the 45-degree. So if it does open lower tomorrow, yeah, maybe you take profits. If it opens higher, that means your 45-degree is still working. That's right. The market took everybody's stimulus package. Raj, you look to see, now we didn't close this one, but if you had things that were looking iffy, again, what's our trading rule? You stay long as it doesn't close below the T line. However, you can see what this one is doing. Even though it didn't close below the T line, you had a bearish engulfing signal. What was it telling you about your trajectory? It wasn't going anywhere, so why not take that money and put it back to cash so you can go find a better chart to work with? Okay, since we're way behind schedule, if you've got a request tonight, just do one. So Jim, go ahead and do the double line. Can you do money management session when you get a chance? Yes. And we also do that, Sharon. If you haven't taken the basic training, take the basic training. Remember, it's $4.95 for non-members. It's $4.97 for non-members. It's $2.97 for members. And again, once you take it and pay for it, then you can keep taking it for free after that for a refresher course. But we do that also in during that session, is how to keep your emotions out of your trading by having a logical money management system. What did I just do? Apparently not the right thing. Vivo. There's your kind of your morning star signal, not quite, but the fact you did a doji sandwich, how long do you stay on Vivo? As long as it stays above the T line. Oh. Matador probably is now heading for the 50. CPE, same scenario. That was very simple today. You had a doji sitting right on the T line. If it opened lower, it was going to trade lower. You would have closed it out. Oh, you could go short on both of those. AMC held up. It still used the 3T line as support. However, I would probably use today's low as a stop, that if they traded it lower tomorrow, that means it's kind of breaking this uptrend and probably could come back down to the T line. So I'd probably take profits. Tesla, I wouldn't be long. I would have closed, if I was long, I would have closed it out today because it was closing below the T line. Jemiah has a good probability of coming down as a blue ice failure down here to the 200. That's a evening star gap down. That's a good looking short. There's your first target. There's wave 1, wave 2, wave 3, the same magnitude as wave 1. So that's a very good short chart. Oh, let's see, there was another one. I think it was Neighbors. Yeah, another good short chart. First Solar, you can think about shorting this one also. A bearish J-hook pattern, especially if they start trading it lower. Rite, that's now turned into a nothing chart. If you're long, it has to open positive and trade positive. If it opens lower, you can see there's no trajectory to it anymore. And I'll do Myra because everybody's going to ask about Myra. Same scenario. This one has to open positive and trade positive. If it opens lower after today's Doji Harami in the overbought area, that means it's not really going anywhere right now in this market. Zoom, you stay short. The bigger the signal, the more compelling the selling. And then you have your bearish left-right combo right here on the T line with a kind of a trend kicker signal. Expect more downside. And TLRY, I would have closed this one out today. There was your bearish engulfing. They couldn't get it back up above the T line. I would close it out and go find something better. SRAX, same scenario. If this opens lower tomorrow, you close it out. It's not a good looking chart. AMAT, that one would have been closed out today for two reasons on a lot of these. One, because it closed below the T line, and two, look at your trend trajectory. It's not going anywhere. Halliburton, you can be going short. Look at your little bearish best friend. Probably at least the 50-day moving average is your likely target. And Groupon, oh boy, I'd be more apt to go short, but I definitely would not be long. So if you were long, you closed out on this day. This day, told you we're back up above the T line. You needed to see bullish confirmation. Even if you bought it on this day and it closed back here, you closed out. Right now, it's trendless. Dark cloud on CYH. If you stayed long, now you see what it's going to do here at the T line, but be ready to close it out. XPEV, observe the obvious. You're in the overbought area. You got a doji, you got a doji harami. If this opens weaker tomorrow, you close out the position. Now, if they open lower tomorrow, remember the probabilities are going against you. Doesn't keep you from not getting back into a position if everything turns around over the next 2, 3, 4 days and starts heading back up. But right now, the probabilities are telling you anything below the T line has better probabilities it's heading down. Supported at the 200 with a left-right combo, not quite a left-right combo, just kind of a doji, but still below the T line. So it's not telling us it's got any great energy to it at this point. You could buy it on strength. Sava we closed out because this was the candle that told us the bulls were taking control coming out of this fry pan bottom type pattern. And this was the candle that told you the bears are back in control because they were closing below the halfway point of that candle. US, this one we closed out just because you had a bearish engulfing, a bearish harami. It wasn't going anywhere. The market's heading down. Another one that if you stayed with it, it has to open positive and trade positive tomorrow to stay. Mavis. Another one that I was closed out today with it closing back below the T line. Vuzi showed some strength today. If you're long, you can stay long. Just be aware that you're at this level. So it needs to continue to show the breakout. Jemiah, I think we did. You could be shorting this one on a blue ice failure. CNI, Doji, you're still up above the T line, so you're still, even the 3 T line, so you're still long. You just want to be a little bit more cautious. I definitely have a stop at the T line. Let's see. Buy on positive. No, I wouldn't buy on positive trading. You're in the overbought area. Just because it opens positive doesn't mean it's going to be a strong signal. It's just continuing this uptrend. So if you're in the overbought area, you can already see that wave 1, wave 2, wave 3 is getting to be the same magnitude as wave 1. I'd be more apt to be ready to start taking profits on weakness on this one. And there was your shooting star doji, your hanging man. The lower open today would have had you out of this trade if that didn't have you out of the trade, because where were they likely to take it to? At least back to the T line. So a lot of people say, well, should I get back in if it trades positive? The answer is that going to be the best trade setup, or is that you're just buying it back because you were in it at one time? So you have to make that decision. Costco, be ready to short this one. XLU, Another one that you have the Doji Rule. There's your evening star signal. You're sitting right here on the T-line /50. If it opens lower, they're still selling it off. That's the utility spider, all right? U.S. Steel held up, but it backed off, and it looks like it was trading up a little bit after hours. You do have kind of your classic pattern setting up, your fry pan bottom followed by a J-hook pattern. Is it recorded? If you're talking about the 2-day session, yes, it's recorded. So that if you can't sit through the whole thing, you can go back and review it. Weibo held up pretty well. So obviously you definitely want to see this trade positive tomorrow. And PPG Industries, that's a nice J-hook pattern setup. Stop us day before. Stop us day before. Yay, you got me there. I just don't know what that means. Boeing, look how far away you moved from the T-line. Right now, if you're long, it has to stay above the T-line. If it trades lower tomorrow, I'd probably close it out. And that would probably also be a function of the market. Nokia, nothing. Whoops. You shouldn't be short because you can't go short, probably on a $4 stock. Definitely don't want to be in this one. Matador, look for it to go to the 50. I think we did Vivo. Vivo, you stay long, but it needs to open positive. Alcoa, that lost its oomph. Now, first of all, you don't have a buy signal here, so that would have been your first suspicion. If this opens lower tomorrow, close it out. You probably can find a better place to have your money. There's nothing there to tell you that that could continue the uptrend. CSTI, another one that if this opens lower tomorrow, you've lost the direction. Close it out and find something better. William, the double line is telling Jim that when he does the double line, then you can put in your requests. And then when he does the second double line, that means you don't put in any more requests. And life, there was another one that when they broke it out, when the closing back below the halfway point of the candle that told you the bulls are in control, you would have closed that one out today. That is the high yield bonds. So bond prices are going down, yields are going up. Another potential bearish J-hook pattern that could continue to take you down to the 200-day moving average. GameStop lost its energy after that long-legged doji. Remember, a doji means indecision. A long-legged doji means a lot of indecision. You're up in the overbought area seeing a lot of indecision. That's usually time to tell you to start taking profits if you were in it. You could do contra ETFs, yes. Let's see, that is the bear fund on gold. Whoops. I forget. This is the bear fund on gas and oil. Leaf, there's your long-legged doji. So this is where you want to be a little bit more attentive based upon, look where the long-legged doji occurred, up here in the overbought area, right at the same level that it topped out before. Now, remember, a doji says indecision. Same as up day, down day, up day, down day, up day, down day. That's also indecision. And that's where the graphics or the colors of the candlestick signals give you a little bit more visual identification when there's a change of investor sentiment. BKI, does wave 3 start the top of the pullback or at the level the wave 1 is made? Yeah, you don't have to be that specific. If this is the magnitude of wave 1, wave 3, yeah, about that same. It's just kind of a general calculation, but what helps you is if you start getting near that magnitude of the move, then you get a little bit more attentive as far as watching for the next buy signals. Pfizer, it's still in an uptrend. You won't make a lot of money with this one, but right now it seems to be holding up. And AMAT, that's a nothing chart. You should have been out of it with it closing below the T line. AMC, yeah, we want to see how this opens and trades tomorrow. You're still in an uptrend. You're still above the 3T line. I would probably close it out if it traded back below today's low. That would tell me which direction they're heading. And this is the shorts on the Qs, which is kind of that little kicker type signal. I forgot I bought that one today. Now, Mike, that's because being as rich as you are, I can see how you forget what signals you're buying. Valero, stay short. DHR, nothing. Not until you see some strength. It is a negative bobble. No, not really. Just junk. Sohu, nothing. If you're short, you stay short. You have your safety stop at the T line. All right. Good night, Tom. APT, right now, wouldn't be long or short. X, a double top. No. Double top would have been all the way up here. This is more of still in a J-hook pattern setup. I think we did Halliburton. Halliburton, you stay short. Long-legged doji tells you something more than a regular doji. Yeah, it's kind of telling you that if a doji says indecision, a long-legged doji tells you great indecision. What is a kicker signal versus a regular or a trend kicker signal? A trend kicker signal occurs in the trend, whereas a kicker signal is at the reversal of a trend. I'll see if I can find one. We probably won't. Ford. I probably would be out of this right now. Whoops, did I scroll the wrong way? In short ETF, we bought, yes. When you're buying a short ETF, that means you're buying it. So you're not, yes, so that's what you can put into your retirement accounts that doesn't allow you to short things. DKI, would you expect a low last July? I have no. Not even going to look that far back. I would expect wave 1, wave 2, wave 3. So there's your first target. There's your second target. So a short ETF can be bought, yes, in an account that won't let you short things. That's what the purpose of them was. I would suspect the 200-day moving average. Is the green line 3-minute exponential? Yes. Toyota, did they announce something? And Bed Bath and Beyond, it's still in a fry pan bottom. It's just barely hanging in there. If it trades lower, you close it out because that tells you not only does the fry pan bottom trajectory disappear, but it's now going flat. All right, Mike. Okay. Oh, fry pan, and that's what you were asking. It's a fry pan bottom as long as it stays above the T-line. Okay, kept you way past your bedtime. Is that a symbol? Bancor, yeah, a lot of the banks gave up a lot of their bullish trading. Okay, everybody, we'll see you bright and early in the chat rooms tomorrow. Have a good evening.